All right, hello everybody. Thank you for joining us today. We will start in just 1 minute, so if you are just connecting, we will start shortly. I had originally planned to play some Motown for you guys while we connected, but I don't know what's happening with my Spotify. It's not playing, so I'm improvising, to be completely honest, but just hang on for a second. We're playing, we're waiting 1 minute until the rest of the team logs on. We've got 20 people in the room so far, all across the Midwest. So just hang us for a second. There we go. All right. There we go. Yes, please say hi in the chat. I want to know who is here. What brought you here today? Are you looking for funding? Are you a startup? Are you hoping to be a startup founder soon? Maybe you're part of the ecosystem, and we'll get to know each other shortly. So let's get started. So welcome everybody. I will introduce myself just shortly, but the very first thing I want all of us to do is go to slido.com, SLIDO.com, and you're gonna enter a keyword called Midwest. It's not gonna ask you to put an email. You're not gonna get spam mail. I promise you it's painless. I just want to know, where are the people connecting? Is Detroit in the house? Is it St. Louis, Minneapolis, Chicago? Obviously, this is part of Made in the Midwest, so feel free to go slido.com, and you're just going to enter Midwest as the code word, or you can scan it on your phone, the QR code there. And I want to know the people that are here today, where are you at? This will allow us to get to know you guys. We cannot see you, we cannot hear you. And so I want to know where our audience is. Don't be shy. The more people that we have participate, the easier and the better the connection and the conversation is going to be. We know that the digital world is hard, and it's not the same to be in person. We were just talking about that a second ago. So the more that we can connect, the better. Obviously Chicagoland, State College. Yes, St. Louis, Detroit, Motown, I love that. If you are the person that is in State College, let me know how you heard about today, because this was clearly, you know, an initiative made for the Midwest, and I want to know how we got there. So thank you for connecting. I am going to go ahead and keep on moving. And like I said, today we're here to talk about VC and where the money's going. So I want to know if you're currently fundraising. Yes, no, we'll start soon. I don't know how. So feel free to drop that in. And also feel free to use the chat. I want to know, if you said yes, have you raised friends and family? Are you already at Series A? Maybe you're past that and you're an experienced fundraiser and you're here to talk to one specific person and ask them for some money today, and this has been the moment that you've been waiting for. If you don't know how, thank you for your vulnerability and honesty as well, and this is a great indication of what we're doing. So share with us a little bit about your businesses in the chat as well. Like I said, if you're not fundraising, then what's interesting about today? What's happening here that you're really excited about? And finally, I want to know, what is your current role? Are you that founder that I'm talking to? Maybe you are a marketing professional that has been tasked with, you know, connecting with these amazing individuals and getting their contact information. Are you currently maybe in a mid-level role and you're thinking about becoming a CEO or a founder yourself? This is perfect. The reason why that is growing bigger is because obviously the answer is the same. So that's fantastic. We had Brandon from Stadia Ventures, who we will mint just a second, ask me, what kind of audience are we going to get today? So this is what we're trying to do. Startup ecosystem builder. I've had just people that are like, I'm a mom and I used to work and I'm at home and this is what I want to do, you know, to get my head back in business. So aspiring VC, what a great answer. That is fantastic as well. I'm gonna end this piece of the introduction, the Slido activity, by saying that yesterday's event that kicked off Made in the Midwest. We had a great phrase from Phyllis in St. Louis, and she said, wealthy women in St. Louis were being approached to be philanthropists, and their husbands and brothers were being approached to be investors. So we decided to flip the script, and now we're asking them to be investors. And suddenly, not so suddenly, we have more diversity in the ecosystem, more money in the ecosystem, and we have more women-owned businesses as part of the St. Louis community. And so I appreciate the aspiring VC, the VC people here to learn what this is all about. We need you for sure. So just to get started, I'm going to do a quick introduction about what is General Assembly, the organization that has put together this event. We are a tech education company, which means that we are founded in 2011 to help more people work in tech. And we decided that higher education needed a revolution, and we needed things or programs that were cheaper and shorter. So we decided to create and be part of the organizations that kicked off this bootcamp model, which means that in 12 weeks, 5 times a week, you can career change from bartending, from lawyers, from data analytics into software engineering, or from marketing into UX design, or maybe into graphic design to UX design after our 12-week program, and we help you get that job. So one of the magic of GA are our outcomes coaches who help you transition through this period of time wherever you've decided that you want a new career. So right now we've graduated a little over 12,000 of those professionals all across the United States. And the reason why we are in Detroit, in St. Louis, in Minneapolis, and obviously we've been in Chicago quite a bit, is because we want to continue to help people that are underemployed or unemployed find new paths to economic mobility and new work. But like most of you who are here that are already or wanting to be CEO or our founders, co-founders, we also have part-time courses, 12 weeks, 2 times a week. And this is to learn another language, as I call it. Maybe you are a great CEO, but you're building a tech company and you need to learn software engineering, or else you need a great CTO. But until then, this could be a path for you. Or digital marketing, Python, React. And so we have 9 part-time courses that could be that path for you to be dangerous enough to be able to lead a team in product and design and software engineering, or maybe just dangerous enough to get that promotion and switch companies. But most importantly, what we do all the time are these events, workshops that gather the community. And in the digital world, our campus is online, but most likely we are in these cities, Detroit, Minneapolis, Chicago, and St. Louis. You'll find one of us running around different venues, putting together events that will actually spark that moment of camaraderie and conversation and innovation. I want to remind you guys that this is part of Made in the Midwest. Tomorrow we have makers and products we're proud of. Thursday, healthcare and AI, so please sign up. And Friday, an employer pitch event where employers are actually going to be pitching to you what's it like to work for their companies. Finally, use the code Midwest50 to get 50% off any General Assembly workshop. This is incredible. I'm going to put that in the chat afterwards. SQL, Python, Excel, customer journey mapping, software engineering, coding, this is it. And I feel like I've talked so much already and we've barely gotten started and my time's about to be up. So with that I want to thank Tyler, Monica, Nick, Brandon, and Bedolla. I don't know why I keep thinking of Leandro's in Chicago. He's my Latinx company here today. So thank you guys for being here. And remember that this is being recorded, and please use the Zoom chat for Q&A. Please interact. And I'm going to kick it off to Tyler Mathews, who is my partner in crime in St. Louis as well. And he's going to be moderating the conversation today. I'll be quiet and let that.
All right, thank you so much. I really appreciate it. I'm happy to be here. Excited to have General Assembly in St. Louis. So let's we're gonna kick it off here in a second. What I want to just make sure we remind everyone who's attending. First of all, I I love seeing people's faces. If you're able to have video on, that's great. If not, no worries. I'm not sure if we can see everyone here anyway, but we do also want to make sure that this is an engaging conversation. If you have a question, feel free to throw it in the chat. Carrie and her team will be monitoring for questions, and we'll make sure to, if we find something interesting, to make sure we throw it in there as part of the questions I have for this awesome panel, who I'm going to introduce here now. So, thanks again. I'm happy to be a part of the General Assembly Midwest Startup Week. This is the second talk, I think, of this week. And we're going to be talking about the future of venture capital in the Midwest. We have 4 great panelists here from the Midwest area, coming from Chicago, Detroit, Minneapolis, and St. Louis, where I'm at. And so to get things started, let's go ahead and just introduce our panel here. And if you can, we're going to have you introduce yourself and your organization, just the elevator pitch version. And then we'll jump into some questions about what's exciting and what you're seeing right now in the industry and in the market. So I'm going to start out with a St. Louis colleague first, just to be that way. And we're going to turn it over to Ben at Stadia. And then we'll make the rounds here for introductions.
I think that's me.
That's you.
Right. Hey, I'm Brandon Janosky. Thank you, Tyler. Appreciate that. I'm with Stadia Ventures. We are first and foremost now a venture capital firm. We just happen to run what we believe, and people keep telling us, is a world-class accelerator program. It's really focused on business development, especially, which means we're looking for companies that have demonstrated early traction. So we're about 5 years old. We have 52 investments in the portfolio. We've had 5 exits in our first 5 years. We're on our 11th cohort, as many accelerators refer to those groups of companies that come through. And we're just entirely focused on sports and esports and anything and everything that touches. That's us.
All right, thank you so much. All right, Monica, why don't you share a little bit about where you're coming from, what you're focusing on these days, your organization, et cetera.
Sounds good. My name is Monica Wheat. I am the founder and executive director, or co-founder and executive director of Venture Catalysts. So we are a nonprofit ecosystem development group, but we do full-scale ecosystem development from everything from workshops to pre-accelerators to full accelerators and into funding. And we call ourselves Switzerland. We partner with just about everyone on both sides of the fence, both general market as well as D&I focused initiatives. Most recently, we run the largest startup week in the Midwest, and we also run accelerator partnerships with groups like Techstars and Startup Boost and Backstage Capital and things like that. And so we run those in Detroit. Our group runs those, and we have about 10,000 people per year attend our biggest event. About 15,000 people per year across all of our events. We have a couple hundred companies that have go through our cohorts on all of those programs. And I'm excited to be here and answering any questions and just learn more about some of the other groups and what we can do to help some of the folks who are on the line today. Thanks.
Awesome, thanks, Monica. Nick, how about you? Oh, you're on mute.
Thank you, Tyler. I appreciate that. My name is Nick Tietz. I'm the co-founder and CEO of a company called ILT Studios. It stands for I Like That. And we are a startup studio focused on supporting underestimated entrepreneurs in underserved geographies. So we have a specific thesis that we want to get more startups going in rural communities, urban communities like South Minneapolis, and informal settlements. So if you are someone that loves starting new companies and you're dissatisfied with working alone or trying to find people that understand what's critical to startup success, our startup studio is looking for founders and experienced people and resources to launch their next great idea. We're putting all the resources together and trying to get more early stage ideas going so that they're more prepared when they come to pitch at the VC and get them into incubators and accelerators.
Awesome, thank you. Leandro, last but not least.
Yeah, last but not least, exactly. Hey everyone, my name is Leandro Bedolla, and I'm with M25, the Chicago-based VC firm. We also have an office in Indy. where we focus on investing in pre-seed and seed stage tech startups headquartered across the Midwest, which we define as roughly the 14 states between Kansas City, Minneapolis, and Pittsburgh. We're actually the most active VC firm in that region, having invested in 100 different companies in the last 5 years across a variety of industries, because we're generalists, investing in just about any industry, except we don't do like biotech, pharma, nor vice industries. And at the firm, I focus mostly on evaluating potential investments and other initiatives like MidwestStartups.com. And outside of M25, I'm a mentor with Techstars Chicago, the accelerator, the Latinx incubator, and volunteer with Latinx VC to increase the representation of Latinx individuals in venture capital.
Awesome. All right. Well, now that we've gotten some introductions underway, we already had a really great question in the chat, but before we get to that, I actually want to just really quickly want to make sure we get a lay of the land, set the scene right now for what's happening in VC. I think what we hear is that people are still giving money right now. I know there was there's a lot of uncertainty earlier in the year. I do see, anecdotally, it feels like there's less news coming out, but there's still deals being done. So can you share what, and Monica, we'll start with you, but then I would have anyone feel free to jump in. What are you seeing happening right now? What types of communities are performing best? Where's the action right now that you're seeing?
Honestly, it's everywhere. I think towards the beginning of the pandemic, we assumed that from our cohort companies, we assumed that we would see more action on the early stage folks and less action on the early stage folks. But at the beginning of the pandemic, it was actually flipped. The later stage folks were getting more of the deal flow, more of the follow-on calls. People were we thought they'd be open to the risk and things like that with the early stage folks, but they weren't. As the pandemic has progressed, it's flipped back, where it's more or less even from what we're seeing. People have figured out, I guess, is what we've been saying, is they've figured out how to connect with founders and how to vet founders, at the earliest stages that they may not have histories with or backgrounds with. So I don't think there's any one sector that I've seen, do better than others. I will say the ones that have had more question marks on them are ones that are kind of the obvious question marks, which are things that are like sports, meaning live entertainment, things like that. Like anything that requires 10,000 people, 20,000 people to be in the midst. Those have had more question marks, but I think for the most part, we've kind of come over the hill, if you will, and now we're back to people just had to adjust and figure out how to connect with each other.
Anyone else want to add to that? I know Brandon, and I called you Ben earlier, I apologize, looking at the wrong tile. Monica mentioned sports. I mean, I know Stadia Ventures is focusing a lot, obviously, on sports. Are you seeing any surprises or any bounce backs, like Monica was mentioning?
Well, a lot of it maybe was a slingshot effect where, yes, there was some pullback and an initial reaction to, there are no butts in seats, but it spurred a lot of innovation. And if you take a company like FanCam that was literally taking pictures of 70,000 people at a time in a stadium or at an event, they were able to transition their business to creating those digital solutions and putting fans in seats digitally, or taking pictures of the cardboard cutouts and sharing those. So they just looked for new solutions to solve the pain point that still existed. There was a fair amount of that, and you could feel exactly what Monica was describing. The boat rocked really far one way, and that's when we knew it was still time to invest for us, but certainly not a time to pull back. But if valuations were down or if situations were difficult, it was just going to mean more value opportunities, not unlike what you saw maybe with banking during the crisis, and community banks took a big hit. Very similar across, I think, a technology scene here.
Any other comments on this from any other folks? And you don't have to, we can keep going here, but.
Yeah, just to add on a little bit on that, we see companies from a variety of industries from across the Midwest and have friends at a variety of firms across multi-stage funding. And there was an effect from like March through June where like Series A investors really weren't doing any new deals actually. They were only doing like maybe some smaller checks into like a seed round or so, unless you were like a high-flying company that was racing, you know, larger rounds and obviously had more of a product market fit based on, you know, millions of dollars of revenue. And some investors were spooked earlier in the pandemic and others weren't. It was kind of like almost maybe like 70-30 or so still investing actively. Like ourselves, we've committed to like 7 different companies since the pandemic started. And some just had to get a little bit more comfortable with not being able to meet founders in person in order to do so. But some industries have continued to be hit hard, especially when it comes to fundraising, and those are the more of the hospitality type of industries. So think those that cater to restaurants, hotels, travel, etc. The restaurant group is starting to rebound as a customer base, but those startups are still going to be hurting, especially if they had been trying to raise funding prior to, during, or shortly after in the coming months. They're going to need a couple of months to, you know, back up that traction. But there has been a lot of innovation in terms of pivoting from whatever solution was affected to a more, you know, like COVID environment.
So has this caused anyone in this group here, feel free for anybody, to change their focus on what they're looking for, or even more dramatically, has it changed their thesis in any way? No, still deals are still being made. No one here stopped making deals. So let's jump over to, there was a great question right out the gate here, and I'm going to try and bring it back up here from Lauren, and I am failing to find it. Sorry, I'm doing a bad job as a host already. Lots of comments in here already, but it was a discussion about particularly Black founders, other underrepresented founders, around the disadvantages of this family and friends round. My guess is that the family and friends round might have gotten hit as well, maybe even more so than institutional money. But can anyone like to jump in to speak towards that a little bit, about, was there any, were we seeing, I would imagine we were seeing a disproportional effect on particular founders and the BIPOC founders. I'd love to see if anyone had any comments or what they were seeing in the market, what was happening, what were you guys seeing, and then how you're addressing that. And then we'll actually try to get to that family and friends round discussion as well. Let's start with that first. And this is open to anybody.
I can jump in and start really quickly. I know half of, I don't know if it's half, I don't know what our percentages are, but we do a good portion of our work in general market, you know, open and broad, with the headquarters in Detroit and more broadly. But then we do a huge portion of our work also within groups that are focused on what we called and what we coined in Backstage, underestimated founders. So which typically are women, people of color, and members of the LGBTQ community. And one of the things that in the midst of this pandemic, like out the gate, the first thing, like we got bombarded, like almost everyone I know actually just got off a call with of leads from other BIPOC groups from across the country actually. And we've all like kind of banded together. We've been doing some larger scale stuff, but we all got bombarded because you have a lot of folks who already, there was a difference in information. And so one thing I would say out of this pandemic is I think all founders, they're seeing information is at a premium. Knowing how to get to people and how to vet people and getting those intros is at a premium. That was already an issue for underrepresented founders, so it became even more so during the pandemic. I think the other part of it is then too, we have these infrastructures of trying to get funding, see if people are even a good candidate for a venture, see if they're a good candidate for other types of funding that we may offer. And I would see across the board, there's a lot of the federal programs and things like that, as you all have seen in the news now, they just realized that that it wasn't getting out to everyone. There wasn't open access that we thought. And so just a lot of groups, especially in Detroit. Detroit, I'm very proud of the ecosystem here because they rallied hard, and they the leadership here rallied really hard to kind of put together a lot of those solutions. To answer the question, and then I'll shut up, more specifically about family and friends rounds, what I always tell our founders is it's not easy. It's definitely not easy just because of disparities in wealth, disparities in access to information. And honestly, even for families that do have wealth, it's just not a known thing. Like they say, there's less than 2% of folks who are getting venture who are underrepresented, less than 1% for those who are underrepresented and women. So to get somebody to convert to being an investor at the family and friends level was already difficult, but it's even more so if they don't see other people doing it, they don't know how to do it, and they don't have good things in place. But what I always tell my founders is, you may not know somebody who can give you $10,000 or $25,000, but you might know 10 people who can give you $1,000, or you might know 20 people who can give you $500. And it's more hustle and it's more work. But I think those kind of things, number one is just breaking down the big boulder of what the problem is into options is key. And then the second part is just other vehicles like crowdfunding, other vehicles that just really weren't as popular in the earlier days are really popular now, and I've really been pushing folks that way as well as methods to get not that over that problem of not having access to friends and family to just, write them a check.
Does do any of the VCs on here feel like there's any concerns with the cap table with the $1,000 10 people? Is that an issue that comes up?
I would think it could be if you got really far down the line. We have companies that have crazy cap tables. They've raised a lot of convertible notes. We're of the mind that, do I like the founder? Can we help this tech grow? We'll overcome that. We've seen it all. They are very, very rarely are they neat and tidy, and some are just a little messier than others. So we'll say I'd rather pick the devil I know rather than the one that I don't. I can see what's going on there and see that they hustle and see that they have supporters and see that they have backers and see that grandma's on the cap table. Hallelujah. I love it.
Adding on to the cap table question, and then Lauren, I'll go back to yours. Cap table wise, I'm not too worried about it. Either one, that's what SPVs are for, or two, that's what institutional investors, first round investors at the pre-seed and seed level are for. We'll clean it up. The ones that are really gonna care are really more like the Series A investors and such. They get a little bit more nitpicky on the topic, but that's what a good earlier stage VC partner is for. Helping you kind of smooth that out. And Lauren, back to on your question. I have a lot of founder friends that fall in a myriad of underrepresented categories, and the advice that I usually have to them, more of on a friend level, is yeah, that's how it is. Unfortunately, it's tough. Our families don't have that generational wealth to pull from, knowledge-wise, especially capital-wise. And if anything, it's just dig into that grit and innovation that we know we each have. And I usually point them out to pertinent accelerator programs based on their industries and people that I know, such as, for example, the Latinx Incubator, the Hillman Accelerator Program, Backstage Detroit, other aspects. Let's see here if I can think of them on the top of my head. But those networks, because essentially at that point, that's how you can network into the people that you don't know yet, that you should know yet, that will be able to take a shot on you, especially if you do build a venture backable business, or at least a strong business. And crowdfunding is always an option as well.
Yeah. Can I add on to there for a sec, Tyler?
Yeah, go for it.
I was gonna say this has been a challenge for us, where we've had to think really critically about what we're doing, what we can do differently or better, because our niche is sport. Generally, I can argue that it's not really that niche. It's casts a very, very wide net over a lot of great technologies and use cases and applicabilities. But between that and an investment thesis and our commitment to our investors that says we're going to mitigate risk by investing in companies that have proven some traction. They've gone out there and they've sold something on their own that we're going to help them repeat many, many times. So that cuts this down. So we had to get outside of our own box and abilities and put a hand out to mass challenge and embrace each other, so that they're on the nonprofit side and they can give non-dilutive grants, and we can identify those founders who don't fit all our criteria in the application process and say, I know where you're going to have success with a conversation and a stage to be celebrated. And just like Leandro was saying, connecting to the right folks. So we formalize that a little bit with Math Challenge, which we believe helps and gives folks a place to land. And then trying to do what we can to celebrate groups like WIST and WISE that are in our world, sports and entertainment, sports and technology, help set up a chapter, plead for, show us your best and brightest female founders. We will embrace them. We try, it's never enough. And we're always willing to take criticism and hear what we can be doing better, but some efforts on that front.
So Nick, I actually wanted to direct this next question to you. I know you're seeing a lot of folks, you're supporting a lot of entrepreneurs, and I'm sure there's a few that you've spoke with that got maybe even got hit hard during the pandemic. Maybe the industry they were in became lower priority. What are you doing to basically to help those folks pivot in this moment, or wait out, or whatever they need to do? Probably not wait out, but what are you seeing? Because we don't know when this is going to end at this point, but what are you seeing the challenges are, and then how are you helping them overcome it to get ready for their first round of funding, or their second, or whatever? And you're on mute too, by the way. It happens to the best of us.
Thanks. Yeah, I think the big thing for for the startups that we're mentoring and that we're talking to is just making sure that they really understand who their customers are and what their needs are, and how can they serve them with their existing product, but maybe in different ways than what they were originally thinking. So, we talk a lot about what's the problem, the solution, how does it connect to a customer, and in what context? Because the first three things probably didn't change, but the context just completely changed. And so it's actually opening them up to think about other adjacent markets that they might be able to go into that they weren't initially thinking were low-hanging fruit, now just opened the door, especially if they've got a more disruptive or transformative digital business. Because the customers that they didn't think would use their product or service, now all of a sudden this is becoming really important to those customers that they didn't previously think would be available. So for instance, one of the startups is called VirtuWolf, and they're a telehealth platform for pets. Half of their market is veterinary services. Well, if all of a sudden people aren't traveling out and about, even more so, or specifically vets don't want to go travel into people's homes, that service just, the market just opened up to them in a really significant way. And so in that instance, we're saying, what are the things that we can do to push farther and faster, and what do you need to hit the market even more at stride? But it'll be different for every business. Obviously, if you're a digital first business, this is a little bit easier to kind of, weather this storm. But the thing we're really asking the startups to think about is, what is your connection to your customers, and use this opportunity, even if you're a little bit slower, to go reach out to them and understand how you can meet their needs. You might unlock some new ways that you can service them or serve them.
Any other comments? Anyone else seeing any challenges in their portfolio of folks that are being clever or struggling to adapt right now? I know we're pretty far along, but any advice that you might have be able to provide from what you've seen in your own portfolios?
It could still be the case that folks are, maybe groups are experiencing a slowdown, if it were fan engagement or insert whatever industry it might be. But what we saw good leaders take the time to do was just look down their product roadmap, maybe jump ahead a few steps. I'm going to get to something that we've been dreaming about. that we believe is going to be a solution, and go do that instead of the paralysis by analysis. Come out firing a little faster and stronger on the other end if you have the resources to do it. It's the reason a product roadmap exists. And you can change that map and move it around and shift things forward. So that was an opportunity for folks to say, all right, I'm not onboarding any customers right now. What can I do with my brain power for the time being?
Yeah.
I know we have a widespread of people tuning in. So, you know, the advice that you'll need, it's going to vary and be more specific to your particular situations. So, you know, take that as you will. But, you know, either the pandemic was a boon or a bane for your business. And if it hit you hard and it's impacting your business, you know, it's survival time. As a founder, especially if you have a larger burn, you know, you kind of do what you got to do for the good of your team and your business, especially if it's still, you know, the main thing you're passionate about building. And, you know, whether that's in some unique ways to reduce burn or pivot around your main value prop to something that's, you know, that's relevant and needed in a COVID world. And, you know, especially if you're in an industry where you really won't bounce back until there's, like, you know, a vaccine out there, or, you know, that seems more clear, then, like, you know, you got to do what you got to do in order to keep your business alive.
I'm curious if anyone has seen or looked at any research that's shown that Midwest companies, how are they faring compared to the rest of the nation? Is there anything that you've seen anecdotally or even statistically in your portfolios versus others, or even just in general trends? Leandro, you were shaking your head yes. I don't know if you had anything to comment on that. Otherwise,
oh yeah. I don't know. You've been like starting off with someone specific, right? So I'm just like, who's he gonna pick next? But yeah, you know, like, we know a bunch of co-investors from across the U.S. And, you know, that's one of the great things about Midwest founders is that, thanks, Rachel. Yeah, I've got, you know, Indy, Chicago, St. Louis. There we go. But, you know, one of the best things about Midwest founders is that because our region is undercapitalized for comparatively to, like, New York or the West Coast or such, they, you know, for lack of better words, grow up having to be more capital efficient, more gritty, and more, you know, just like executing and getting stuff done, as opposed to, say, Silicon Valley's more inflated valuations, rounds, and, you know, juiced up metrics like we've seen with some companies like a WeWork or a Casper or such over the years. So if anything, I've seen that Midwest companies have weathered this much better than their counterparts in the East or West Coast, because they didn't have wild, frivolous spending. You know, they're building a more sustainable business and were more capable of pivoting over to whatever they had to do in order to cut down burn or turn profitable at this turn of a dime much better than their counterparts on the coast did.
What we've found in the Midwest, while we're not necessarily deploying our capital to Midwest founders, we are here. This is our world headquarters. Our deal flow is global, and we have investments variety of corners of the globe. But what they used to do until the pandemic was come to St. Louis or Frisco, Texas. And when they got here and they started to meet with the ecosystem and the people and our friends, our supporters and the mentors, whether they were from the East Coast or the West Coast, their immediate reaction was, well, what's the catch? Why are they introducing me to such great people? Why are they offering me their expertise? What do I owe them? And you don't. You give first and then probably second. And so when you build, you know, a group of supporters around you that do that, whether it's good times or bad, you're still going to have those kind of supporters. They don't go dark on you if you had an overinflated valuation, right? So something about the Midwest is genuinely different. People feel it, whether they come from Tel Aviv or South Africa or New Zealand or New York or San Francisco. They get to St. Louis in this case, and they say, wow, I've never been embraced anywhere like this?
I would definitely second that. And I'm sorry, Tyler, I interpreted your question a little bit differently when you first asked it, but we've always said that about our founders. Like our founders, especially the ones that go through our big full accelerators or go through the big full funding process. We partner with them on getting their first check and then helping them go on and get future follow-on funding. And one of the things we've always told them is like, we let them know ahead of time, like if they're in the Midwest and it's a Midwest-based founder, things like that, or investor, I'm sorry, you're likely they're going to be looking for more conservative numbers. They're going to be looking for more sustainability. They're going to be looking for things like that. Those are their markers. But if you go on the coast, and we've seen this to be true, in the past, it had always been that a lot of some of the folks couldn't get through the doors because they weren't asking for, like you guys are mentioning, some of the inflated rounds, if you will. And they were like, well, they weren't a fit because they were looking for bigger plays and things like that. I think that part has changed for sure. I think number one, investors from both coasts are now looking at the Midwest and some of these other markets that we work in. I think they're looking at them for opportunities and spaces in ways that they never have before. But one of our things in Detroit that we're super proud of, and that has always been kind of a long known thing, is that everybody here wants you to win. And people have said the same thing as he was mentioning in St. Louis, is people have always said they come here and, folks are just on them to win and trying to figure out who they can introduce them to and who they can, who they can put up on deal flow and all that good stuff. And then when they go into other markets outside of the Midwest, they don't see that, and they didn't understand the value of that. But even more so now, because of the pandemic, where folks have the ability to work from different locales that they never have before, that's opened up a lot of ways and relationships that wouldn't have been there before. But it took a minute for things to level set and people to move and all that good stuff. But we already had a big trend of folks moving into the area, and we've just seen it increase, and that's helped us get deals, and that's helped us get term sheets and things closed more quickly, because they know what they're going to get by being a part of this community.
Yeah, that's great. And I hear that a lot too, which is, I think is really encouraging to be part of the Midwest. There's a lot of hardworking folks here, talented folks that, but I think the thing that stands apart is definitely that the community aspect, which I think is really a great value prop for this area for startups. I did want to pull a question I got from the chat here before we moved on to some other topics. Rachel here had asked about the opportunities. Let's see here. She said, how do you evaluate opportunities that may not have been hot commodity 5 years ago, but today the market is saturated? And I think, we hear that a lot, and somebody actually made had brought up AI, right? And I don't think that anyone's suggesting you chase the hottest buzzword in Silicon Valley, but is it still worth it for the entrepreneurs if they have that, if they see that market need, but the market's saturated? What are your advice for an entrepreneur like Rachel in this circumstance?
I would wonder what the competitive differentiator will be, and being able to articulate it. And you might build a fantastic lifestyle business. Some people may think that there's a negative connotation to that, but there's not. That's a path that can be fantastic. Doesn't mean you have to build a venture backable business, and chances are someone will just tell you that right away. So yeah, just about picking that path.
And I would follow on with that with a lot of folks at the very beginning of the pandemic, when everything was shut down. We had a lot of new folks coming into the ecosystem, not our existing companies, but like new folks. They're like, well, I'm going to start a video webinar company. I'm going to start all these things that they'd never been before. And that was one of our earliest kind of, feedback community sessions was, if you weren't already in this space, and you weren't already passionate about this space, and you didn't already have a niche in this space, now is not the time to jump into this space, unless you've come up with a technology or something that is unheard of. But to your question, you're looking for things that are already saturated. That it's not time to jump into a saturated market when it's already there. I think there's a lot of ways that folks can build businesses that have value. even though there's a ton of folks in there. It could be locale, it could be, you know, more of the customization aspects, things like that. But all those factors are, you know, always going to be unique depending upon the person, who they are, the founder, what connects they have. But it's really just about their timing. Saturation, net saturation doesn't mean don't go in, but definitely don't try to jump in after the pool is full.
Yeah. So I wanted to try and stay on this. Well, yeah, I'm trying to make sure my timing is okay here, but I wanted to just at least discuss still a little bit about what's going on in the future of deals. You know, obviously we've been in this pandemic for a while. Who knows when things will go back to normal? What should founders be thinking about if they're getting ready to raise? Is there anything that maybe the things that they learned before about fundraising that they should be thinking about now that might be different? And I know that's kind of a general question, but are there any nuances that you've seen? The startup community seems to always find these like trends, and then there's a million YouTube videos that come out about like how a startup should build their cap table, how they should do, et cetera, their deck. Are you seeing any trends right now that are helpful for founders as they're looking and getting ready and preparing to raise?
How about,
yeah, go ahead.
How about this? It's not a trend yet, but I'd love for it to be. We've seen a couple of founders that excel at communication. They've been incredibly transparent, and they treat regular communication to their investors the same way they do to partners, sponsors, stakeholders, supporters. So they're telling you about the crappy KPIs they had last month in a couple of things. They're telling you about the developer they had to fire. They're telling you about their CTO had a baby also. And then they're telling you about how they unlocked some new capability. You go, oh my gosh, I've got a transparent founder here. I'm already doing due diligence, and I'm learning something about this industry that I'm interested in. Wow, if this is how they communicate to me and I haven't even put a dime in yet. So they're creating a story arc, tell you what they're working on, tell you how they did against it, tell you what wins and losses they had. That's all we could hope for. But very, very few, way less than 1 in 10, communicate that way. It takes time, it takes guts, it takes being very vulnerable. It takes a lot of confidence in your team to know that if you've had some negative numbers for a month or 3, that you're doing the right things to come back, that you can be nimble, and you'll report those too. Love to see that be more of a trend. It's really empowering, and it sets you apart.
Mm-hmm.
Yeah, I think that's really cool to hear you say that. You know, one of the things that we coach founders is as they're beginning their startup journey is that you know, communicating how and what they're doing and how they validated their market or how they invalidated parts of their market and why they're going to now pivot in this other area allow you to be more systematic in and more disciplined in your startup process. And I feel and we feel that more venture capitalists and other investors would appreciate that kind of disciplined entrepreneurship. And at the end of the day, if you believe that they know what they're doing or that they understand how they're operating their startup, even at the early stage, you'll be more likely to not just win hearts and minds because you've got a good idea and a new type of product, but none of us can predict what that future is. But if we at least know what they're trying to do right now and how they're, like you said, winning or losing, I just think that that's going to create better ecosystems, better and stronger entrepreneurs, and more trust from people that want to invest specifically in underestimated entrepreneurs that have been overlooked for a long time. There's just a lot of opportunities here.
That's so well said, Nick. You want to get really vulnerable? Put at the end of your letter every month, cash on hand.
Mm-hmm.
Hey, when it gets down to $452 and that feels really just terrible to you, say it. And then see what happens next month. What can you report? What can you do with less? But no one knows if you don't share it.
Mm-hmm. And I would agree with both of you guys and say we've been, I don't know if it's a trend per Tyler, how Tyler was saying, but definitely in the midst of this, like people redoing their businesses like as if they were starting right now. Because any of our companies who are waiting for it to go back to the old way they used to get customers, the old way that they used to communicate, the old way that they used to, just operate their business, no one knows when that inflection point is going to happen. So you have to create your business as if it were right now. If this was the only way that you could get customers from here on out, if this was the only way that you could communicate with your founders from here on out, that's how where the focus needs to be. I don't know if that's a trend per se, but the folks who've done that and who are embracing that and moving forward are thriving. The folks who are kind of less vulnerable, waiting, not putting things to his point out there, those folks are fading because they're waiting for this ledge to drop off that we don't know when that's going to be. It could be a year from now, it could be 2 years from now before the country and everything goes back to normal.
That's great. Yeah, think of it like a golf shot. You can only take the next one rather than lamenting that you wish you shot from a different tee or picked a different club. You can only do something with what you've got right in front of you.
Yep.
Yeah, I don't think anyone would disagree that more communication from their portfolio, I think, is a bad thing. And I agree. I think we started doing, we're a nonprofit here in St. Louis, but we even put the cash on hand for our board. And it just clears things up really quick when it's the bullet point. and then you're able to explain it. So that's terrific. I think we're going to turn it over actually now to Q&A. So I would love for all of you in attendance here to throw your questions into the chat, and we'll try to bring some of these up. Paul, I'm going to try and cut to the chase here on your comments. I think you're talking about AI, renewable energy, and security, and you thought the focus on these in these initiatives. Let's see. I'm trying to phrase this correctly. Is anyone on agreeing that the focus should be more open? Oh, let's see here. I don't actually, Paul. If you could help me and try to help me understand this question here, that'd be great. And while I'm trying to get past my my slow reading here, we'll take other questions so I can catch up. Any other questions for the panelists today?
So Tyler, I think we have a couple in the chat right now, or the Q&A function. And Rachel says, considering deals have been made during COVID, has the expected ROI schedule changed? So we'll start with that, and I'll allow Leandro, Monica, and Brandon to start, and then Nick, if you've seen anything in Minneapolis for sure. And I'll continue to send some your way. We've got 10 actually.
I got it. See the Q&A now. Thank you.
So Brandon, you can kick it off. What's going on? Or Monica, you came off mute. How are you seeing ROI affected by COVID?
I was just going to say, we haven't had any major changes yet. I think we're still using the same models that we had before. We had to redo a whole bunch of term sheets. We had to do a whole bunch of stuff like that just to kind of readjust. But we're still waiting and allowing people grace, if you will.
Yeah, so I'd say that on ROI, venture capital, we're investing for the long game. Like we have this, especially at our stage, pre-seed, seed, and all the panelists are in that area, or even accelerator. Like we're thinking about your company and you and your team at least 7, if not 12 years for the future. Yeah. I see you walking over there with 10. Yeah, I'm like, yeah, more. Yeah, 10 plus years, 12 years in the future. So I wouldn't say that our thoughts or the industry's thoughts on ROI has really changed. If anything, maybe the vintage year might be 2020 was, looking back, the year where all this happened. So maybe that ends up with a 2008 effect where you had a bunch of different very innovative companies come up, and it's investors that invested in 2020 did really well from those companies 10 years later. Or maybe it ends up being just a bit of a dip because founders were, kind of hesitating on whether they should or should not go and pivot, and then therefore the funding rounds ended up a certain way. But either way, we have a very long, time frame in mind in VC. So that's that.
How about you, Nick? What are you seeing? Oh, mute. Let me unmute you here. There we go.
I don't really have a great perspective on that question right now.
No worries. Brandon?
I'll share it. Our view, our lens is a little bit different. So we haven't really taken a different approach. That's because our experience tells us that in sports tech, the industry has a pretty strong demand for acquiring a technology versus building it itself. And so we take industry feedback in a real crowdsourced fashion about what do they want to buy, what would they acquire, use that as a filter for what do we want to bring into the program and help with business development. And when it comes out the other end, we believe that it's chances for a big partnership, an acquisition, or a significant event. Maybe it's a bigger round, are stronger. So the average amount of time we've been invested in a seed stage company before they exited was 18 months. If you build something that's in strong demand, a blockchain ticketing technology, and Ticketmaster has to have it, chances you growing for 10 years was very slim. Not that we have any ability to really predict these. That's just what's been happening. So we do keep an eye on what if there's a liquidity event in 2 years. What will this look like? So we do consider sometimes a shorter time frame, depending on the stage of the company.
So I was going to ask another question here. I want to make sure I'm sensitive to time. We have time for maybe one or two more questions here, Carrie?
Yeah, actually, I want to make sure that we get some of these answered. So the first one that I want to throw at you guys is, if your idea requires developers to build software, how can you pay them and get investment just to get your idea off the ground? So does anybody have an answer for that?
Usually it's equity. At the early stages, it's usually equity. You usually have to get them to believe in what you're doing and do equity. The only other side that I've seen, well, I've seen a lot of different things, but one that I've seen here and there is I've seen some folks, if they have a brand that's separate from the app or the technology they're trying to build, sometimes they get the customers to fund the development, and then they use that to pay the developer. I've seen a couple of hybrid things like that where they are using customer funding versus anything, but usually it's equity is what you're paying a developer to get on board while you're trying to raise money and build a company.
If you can't pay them actual currency, then yeah, I guess equity is only your real other point. There are some dev shops that do specialize in that as well, but just you got to do what you got to do to get your business going and start, especially if it's a tech company. But at least on the VC side of things, that will be a knock towards you if you're a tech-centered approach, maybe not just tech-enabled, but I don't know, some sort of computer vision play or something, and all your tech's outsourced, that will be a knock. But if that's how you got to start, that's how you got to start, and then maybe you can bring in a team afterwards. But see how it works out, maybe. And if it's a really tech-centered approach, you might be better off trying to find more like a co-founder, VP of engineering or sorts to help you flesh that out.
So there's another question here from Lo Testatore, I think. So this is something that I think is also really appropriate for right now during COVID times is how do you access VCs for informal conversations to ask, quote unquote, stupid questions? I know that before COVID, there was always that, can I grab you a coffee? Can I, all these tricks to try and get you to form a relationship before they ask you for money. Doing that on Zoom is especially hard now. How do you do that? And what are some advice for people to reach out to get those early conversations going with VC? Who wants to step up for that one?
I'm not great at doing this, but if someone can offer me something rather than just asking for it, hey, I did a little research on this market, or I've been to your portfolio page and I saw how these two kind of played together. I thought that was interesting because how do you think that fits with X? do a little homework, give me a little something, because otherwise it'll get lost. I have a startup, read my pitch deck. I'm raising $3 million. Do you want to? No.
I guess it kind of depends on the nature of the reach out, because at least the way I interpret the question was more of like, that initial like relationship building aspect, as opposed to like actually starting to raise around. If it's that initial conversation, then you kind of hear some people, recommending to do so, then like, like I guess shoot your shot, but like interactions on maybe like Twitter or LinkedIn are probably gonna give you some of the best low-hanging fruit on there, especially if it's something relevant to they recently put out or you saw them interact with. But like, if you got to send a cold email, send a cold email. But if you're, if anything, I'd recommend that you reach out to more junior individuals, like, analysts, associates, maybe even up to principals. It's going to be harder to get in a GP's time or a partner's time or calendar for a 15-30-minute chat if, you're not even racing and if they're not used to that or don't tend to do that, which it varies from firm to firm, really.
And I would just add that in my heyday, when I was on the other side, I was an expert stalker. And the ways that best worked was, I remember chasing down like a Facebook lady that I was looking to like do a big deal with, found a place that she was speaking, had no clue what they were even speaking about, bought a ticket to the luncheon and ended up sitting at her table and just made a connection that way. Obviously, in the time of COVID, you can't go live to events, right? But you can still go to events where they are speaking, or you can go to other places where they're at and ask questions and have questions prepared, kind of like what you guys were both saying, is have questions prepared, like, hey, I read your article on this, or hey, I did this, I was curious about this, and have that be something that they remember. And then usually at the end of the sessions, they're giving out contact information. You can use that as a follow-up point to have a conversation, like, hey, I was the one chatting with you about this, or I asked this question, I wanted to follow up and stay in contact, or whatever. That's your best bet, and in my opinion, on how you're going to get over being a cold intro, because I get a ton of folks, just like random folks who just reach out, which I'd love to help everyone, but you can't, like you can't look at everyone, even if it's a great company and they've got a great deck and great tech, you just can't help everyone. So you have to have connection points. And so it's the same as if you're at a live event, you just find the connection point and build on it. Figure out ways to be in the conversation stream of something that they're a part of. And I think you'll have a better chance of getting past a cold intro. But also just really quickly, the trend tends to be now with a lot of VCs that I'm talking to, who are my friends or who are just in the sphere, they seem to be doing this whole no warm intro thing where they're looking to, actively try to eliminate that, especially for underrepresented founders, because they know that that's a barrier. So look for folks who have that, and say, hey, you said no warm intro, so I just wanted to reach out and like look for companies that have that as part of their setup. And I think you'll have a better chance than just shooting a blind shot into a big long list.
Yeah, I think, to add to that, I think one of the mistakes that many founders make, especially if they haven't raised a lot of capital before, is you need to treat any venture capital or any investor just like any new customer in an early stage startup. You need to know them better than they know themselves. You need to understand what are their interests. What does this venture capitalist, what kind of startups do they want to fund? What were the last 10 that they funded? Go find the founders in the other startups that they funded and find out why, because that will help you with your pitch when you reach out to them. And in fact, if those other founders who probably understand how hard it was for them to raise money, they might even make that, whether it's quote unquote a warm intro or not, but they will give you the keys or the secrets to help you understand what you need to do to stand out from the crowd. Because just like even in your own product idea, there are thousands of people that you're competing with, and it's the same with this. There are thousands of people approaching all these VC funds, but the other flip side to remember is that you have the one thing that they don't have, and that's good ideas, and they need deal flow. So remember that you're actually in a better spot than you think, but you have to take a moment and understand your customer. And in this case, your customer is that venture fund.
Yeah, I think that's terrific. And Monica, yeah, they have to change from being expert stalkers to acute Googlers. And learning how to write a good email is important. All right, I know we have time for maybe a few more here. So ET was asking about single founders. Are they still looked down on? I guess, I don't know, are solopreneurs, are they at a disadvantage from what you're finding? Is that making any difference today in COVID times? Monica says no.
Our approach would be, we would prefer co-founding teams.
Okay.
A group of 3 can be an interesting dynamic. There's just something about that support system. Maybe it's a technical versus a business, and they complement each other really well. Love some of our solo founders, have plenty of them. We ask the question in our applications, and we're curious because it is important to us, though, to know that people have a person, not just an advisory board, but somebody with the same skin in the game or comparable. It is important to us.
Yeah, it's one of those things where like case by case, we'll see. Like we've funded solopreneurs before, but like mentally, we will knock you a few points in our mind, especially when we're comparing you potential investment opportunity you versus the 5 others that we're evaluating that week or whatnot, and considering and figuring out whether we want to keep on digging in either of any of them. So if anything, the thing that growing a team, even if it's like, just 3 or 5 individuals, as long as it's sustainable, expense wise for y'all, or equity wise, is that it's kind of like a proxy for seeing how well you can get others to believe in your vision. How good are you going to be at managing and recruiting other individuals once we fund you? If that's still kind of a question mark to us. If you don't have, you haven't done that yet for your company, and and this is the thing that you're really passionately working towards. So it's it's I guess a signal, for lack of better words, for many other aspects, but like it's more of a case by case situation.
Tyler, I'm going to step in, and I'm going to do a rapid fire, and I just want Monica to answer, how small in dollars will VCs go these days for first round financing? So just a quick answer about that. And then I want Brandon to answer, how do you view the classic MBA founder with a potentially scalable idea, but no code to show for it? So we'll just do 1 specific answers, and then I have 2 more for Nick and Leandro. Does that sound good?
Sounds good. For most VCs, early stage, about 25K is one of the earlier checks. Anything less is usually in the angels.
Yeah, me?
Yep, go for it.
Okay, my next. I would say we love and embrace the MBA background. We're so focused on traction so that we know what we need to repeat, that the term accelerator for us sometimes isn't applicable, or a biz dev boot camp, or we're an executive MBA for repeating something that you've had to grind it out yourself, which is why it was so important that we reached through the ecosystem to partner with Mass Challenge, for example, and to understand what GA is doing and all of these things. We're going to be really focused on, show me that first sale, and then God, we can do a lot together.
Nick, for you, for Leandro, how useful is investment history in the age of COVID?
So the question isn't super clear to me, so I'm going to give you 2 answers for that. So in terms of investment history, if you're telling me if you've raised previously, then like I always want to know if you have raised or not, because it'll play into the valuation, et cetera, and how things have progressed. But like it's case by case, and it can matter, it cannot matter. If anything, if you raised before, then I guess it's kind of like a good signal. But either way, we're going to make up our own mind. And yeah, I'll assume that's what the question was.
Yeah, it's the COVID history. So we'll leave it at that. I wanted to make sure that we acknowledged it. But I want to end with 1 more. And I'm going to give a shout out to Tyler, of course, because he runs Venture Cafe, which is a gathering of entrepreneurs, innovators. And usually where Venture Cafe exists, you can talk to investors during office hours. And that is one of those spaces where you get to learn and ask these questions as well. But to end the conversation, I want Nick to answer what organizations in the Midwest teach new founders how to fundraise. So if I'm not ready yet, if I'm still maybe trying to understand this world, where should I go to for information aside from Venture Cafe, which you should?
Well, that's great. Actually, one of the startups that we created in our studio is called ILT Academy, and we are teaching early stage founders the specific skill sets they need to get their company up and off the ground. And so that's one great resource. The University of Minnesota and Launch Minnesota also have some great resources for entrepreneurs looking to raise funding. And then lastly, Great North Labs has put a lot of resources online to help early stage founders raise money. So those are some great resources in Minnesota.
Detroit, Chicago, and St. Louis, what are the organizations helping founders learn how to fundraise?
I was putting them in the text chat, but my company is Venture Catalysts, and so we do full ecosystem development across the board. One of the groups that we work with is Startup Boost, which is a global pre-accelerator. It's in 14 cities. We also work with Techstars, and Techstars has programs in Startup Week in 40 countries, and I think total startup programs in 140 countries. And they do a mass amount of pitch boot camps, understanding the process, things like that. Also in Detroit, we have a couple different things out here, including we just recently did the Backstage Accelerator, which is for underrepresented founders, but there's also groups like Tech Town Detroit and Build Institute that also are helping those early stage companies figure out their plot and get ready to pitch.
I would point all great resources, and I would point others to check out MidwestStartups.com. It's an initiative that our firm has actually put out to increase the amount of knowledge shared around the innovation ecosystem, and part of that is a ecosystem resources page, and I personally created 12 of those for the 12 major startup cities in the Midwest. More to come later, which include all the ones that are mainly represented here in this call. So once again, that is MidwestStartups.com, and that'll have a slew of things from from the various accelerators, startup weeks, etc.
Okay, with that, Tyler, I think we're done. Wrap us up. What was that gold piece aha moment that you had from today's conversation? And that's it. Let's say goodbye. It's late.
Yeah, thank you very much, Carrie. I appreciate you and what GA is doing. Also, thanks to everyone on the panel for being here tonight. Really appreciate your time, and then also the insight you're able to provide for all these folks on here. And I think the lesson to go away from here, hopefully that everyone learns, is that there's still plenty of work to be done. It's not a time to stop, and to keep pivoting and experimenting until it works. So thank you all. I appreciate your time, and with that, we will make sure you check out GA for the rest of the talks that are coming up this week. And with that, have a good night.
Sounds good. Bye, everybody. Thank you, team.
Thanks all. Appreciate you.